All right, you saw the title. We've got a scary one today. We've got Joe Terranova saying Powell could send the bond market parabolic. That would obviously mean that the stock market is going to be parabolic too, just in the downside. So that is not good. He's going to give his reasoning and opinions on why he thinks that. Jackson Hole is tomorrow if you don't know. That is where we're going to hopefully get the guidance for the next foreseeable future on the rates. As always, guys, if you like these videos, hit the like button and let's jump into it.
Welcome back. Good to see you.
Good to be here,
What's
Scott.
Up with this today. We said there are two massive events this week. Nvidia was the first one we had to get through. You checked the box. I mean, that was a win.
Sure did.
Stock doesn't look so great today. Market doesn't really look that great today.
By the way, guys, if you didn't see Nvidia in the morning, up almost over 8%, lost it all. By the end of the day, it was almost flat. Can you believe it? And not only that, every single thing was down. The SPY was crushed, the Qs were crushed, all big tech was absolutely hammered. Today was nasty.
As we now turn our attention towards Jackson Hole. But what do you make of this market?
Well, you told us last week when you returned, you said it was a sell the rips market, and that's what it is. It's sell the rip. We're still, unfortunately, in that state. We're up against very strong historical seasonals. The weakness prevails, and the bond market took over as the catalyst from Nvidia. There was nothing wrong with Nvidia.
Obviously.
It reaffirmed the potential optimism in terms of being able to come out of the earnings recession surrounding generative AI, but it's about bond yields. It's bond yields here and now. And going into tomorrow's Jackson Hole speech, boy, Chairman Powell has to really walk a fine line because the
reason the markets are selling off, if you didn't know, all the treasuries are on a tear. All of them are up today, which is bad news for the market directly.
Could send the bond market parabolic.
So you say, let's take this on a couple levels. Number one, you're suggesting that the profile of this market has changed. What was a buy the dip market is now a sell the rip market. Number one.
Correct.
Since you say nothing wrong with Nvidia. Maybe the only thing wrong with Nvidia is that it's up 200% year to date and up 50% in 3 months going into the print. So there's a lot of momentum and froth, perhaps, and a lot of great feeling already in the story there. What do you make of that?
Listen, Nvidia right now has the most intense positive momentum of a stock that I can remember in recent memory. In addition to that, it has fundamental tailwinds. If you want to try and understand what the actual risks are surrounding Nvidia, it's that you could see market cap loss from a lot of the other mega caps. So if I actually look right now at Apple relative to Nvidia, what has a stronger fundamental tailwind? Without question, Nvidia does. Nvidia has a fundamental tailwind that a lot of the mega caps don't. So I think portfolio managers are going to be, and they're already underweight Apple and some of the other mega caps just because of where they are in valuation. But I do think you're going to see a little bit of an internal rotation amongst the Magnificent Seven going towards Nvidia at the expense of the other mega caps.
So if institutions and mutual funds, hedge funds are underweight some of these names, as you know, yesterday we had Eric Woodring on from Morgan Stanley, suggested that Apple's underowned in that cohort. And then we learned today from another firm that says a lot of the mega caps underowned in terms of that cohort. Does that lead to a chase? That lead after you get...
If the Magnificent Seven is underowned, guys, that does build to the bull thesis that when you have a bullish year, we're going to end even more bullish. These people will chase. If the stocks start going up again and they put in this higher low, it's going to look pretty bullish.
Some of this...
You just have to make it through Jackson Hole.
Settle out. Does that lead to a chase, which gives these stocks that next leg after you consolidate for a little bit?
I believe it does, but I don't think we see that until later in the fall. I think in the fourth quarter, we set up perfectly for a chase for performance driven by the positioning, the sizing of the positioning in a lot of those mega caps. But I don't think that's going to happen in the next several weeks.
Okay, so hold your thought for a second. Let's bring in Leisman. Steve Leisman, our senior economics reporter. He's out in Jackson Hole, obviously. He is there because of that big speech tomorrow. So, Steve, give me your take here. Joe just said that the chair tomorrow needs to walk a, quote, fine line, or he could send the bond market parabolic. What's your sense of the kind of message that Chair Powell wants to deliver tomorrow morning?
Yeah, Scott, can I go back and talk to you another thing that Joe said, which is I thought it was really interesting that the bond market looks to be sort of trumping the Nvidia earnings here, which means the market is really way more concerned about what bonds are doing. then it seems to be these unbelievable earnings from at least a single company anyway. And that kind of gets me to my answer to your question. I do think Powell has to walk a fine line. I don't know that I can say that or the bond market will go parabolic, but I think he's going to walk a fine line because I think there's a fine line to walk. It's one where the Federal Reserve has to still have concern about inflation, but had a bunch of success in bringing inflation down. Inflation was 5 percentage points higher this time last year, Scott, and we've gotten to this point with, unchanged unemployment. GDP is running pretty strong. That's the big question to me as to whether he feels he needs to address that stronger inflation, stronger GDP growth. Remember last year he said that bringing down inflation would require a period of below trend growth. He never got that, but he did get inflation coming down. I don't know how much concern there is for that. We had Harker tell us today that higher rates at this point was not a concern for him. And he thought, you know what, in some case, it could help bringing down inflation. So I don't think we're that on edge on monetary policy here because I think the Fed is definitely in a wait-and-see attitude. I don't know what the market heard this morning from Harker that made it go feel sour about the world.
Well, I mean, Harker said, quote, right now I think that we've probably done enough. I guess my question to you is Harker on an island? Is he on an island or is he part of the majority at this point?
I don't think so. Look, there's if you want to put together a majority, the majority would be those who think they've done enough or those who think you got to go another quarter. That's a big part of the committee right there. There is a contingent out there that does think maybe there's one more to go, but they're gonna let it ride, I think, a little bit.
But even if there is one more to go, we've had some big money managers come on and some bank managers come on and say that 1 to 2 more small hikes are already priced in. So that's not going to be the worst of it. What's going to be the worst of it is how they guide for here on out, guys. We have a lot riding on tomorrow. There's a thin line to walk, and we are praying that Jerome Powell does not send the bond market parabolic.
Scott, I think a pass in September is probably a done deal or real close to a done deal without any obvious acceleration of inflation. And then you've got a few more months of data where the Fed can come back and figure out if it's done enough. Harker told us he thought the Fed was restrictive already. He didn't say sufficiently restrictive. That would be an incredibly dovish comment from Powell if he says it tomorrow, that we are at this point sufficiently restrictive. That would tell us that he thinks we're at the point where we can hold for a while. That's what Harker thinks. That's what Collins thinks. I think that's what Bostic thinks from Atlanta. So there is a contingent of, I guess you'd call it the we've done enough crowd.
All right, so there's Steve Leisman and Joe Terranova giving their opinions on why the bond market could go parabolic. Steve Leisman does not agree. He doesn't think it could go parabolic. He does think that there is a thin line to walk, but he thinks that there is a path to walk that thin line. What do I think? I think there's going to be a pause. I think it's going to set up to be more hawkish so that he can warn the markets and economy, almost threaten them to stay in line. Say, look, we don't want to have to raise again. We think we've done enough, but if the economy shows us we have to, we will start to raise again. Hopefully he thinks what he's done is sufficient. That will tell us he's ready to pause for a little while, and we can start digesting some of these hikes instead of just delaying them farther and farther and farther while we're still putting in more and more. Tomorrow is going to be a huge day, guys. I hope you got some cash on the sidelines. I hope you enjoyed the video as always. If you did, hit the like button, and I will see you tomorrow in the next one. Peace.